All right. Well, good morning, everyone. Thank you so much for joining us for another edition of the Real Estate Backstory. This is our weekly little, I guess, excursion into the goings and comings in the real estate world. We call it kind of, exposing the soft underbelly of real estate here in the Atlanta market. So, my name is Alan Richardson. I'm the managing broker at Maximum One Realty and Realtor Partners.
My name is Ming Richardson, the compliance broker for Maximum One Realty and Realtor Partners.
And we are your host today. And so we got a lot of cool things to kind of go over with you. Every week we showcase all the new information, anything we find going on in the news, that kind of stuff, everything as it pertains to real estate. So we'll start off. So we have a couple of CE classes this week. So on Tuesday, we have a live in class here in our McDonough office, right? Rehabs and new construction, how to avoid getting ripped off. And is that a big deal right now?
Absolutely. And right now, it gives you the pros and cons from different perspectives so you can better understand and also better negotiate with a new construction builder. And I would encourage you to come in person because you get more interaction and also we have sponsors.
Yeah, exactly. So, and then on Wednesday, we also have out of the airport office, we have Sharon Mason with Silverton is doing Mortgage 101, where she's going to go over all the different loan products and, whole 9 yards as far as all that goes.
Any DPA that currently may or may not maybe offer in different counties and municipalities.
Yep. All right. And then, so we kind of want to start off with talking about kind of what's happening here in the housing market kind of thing. So we are starting to see signs of the housing market softening. Now, I don't say that because I want people to run around with their head on fire. We don't feel that we're not going to see property values decline, nothing like that. But we are starting to see early signs of it not being as much of a dumpster fire.
Yeah, fierce competition where seller holds all the keys where the buyers are at their mercy.
And honestly, there's been a lot of talk about that going back and forth, and as far as like, the sellers are taking advantage of buyers, but we were here in 2008 when the buyers were taking advantage of sellers too, because back then, the tables were turned, and so the only constant we have is change. And so right now, we just kind of want to talk about what we're seeing both in our transactions and here at the brokerage level, as well as kind of what's going on. So, some of the things is that, we are seeing where mortgage rates are inching up, and we'll talk a little bit more about that also. But, we also, like even the chief economist at Moody Analytics is saying, hey, guess what? The housing market is starting to show cracks kind of thing. And so it really is.
It does not mean that we're going on a bubble. It really doesn't. So don't think when he says crack, meaning we're getting to see a bubble or in a bubble.
But, honestly, we actually, we feel that it's actually very healthy. One is that, we're kind of going into starting to see some more normal seasonal trends kind of thing. And so, we will see things tapering off, rising interest rates. I would love to see us, at the, 5% property value growth rate.
Oh, I was like interest
rate. 13, we're at 13, between 13 and 15% for the year in property values over prior year, and actually more on the month to month basis as that goes. And that, we all know that that's not doable. We'll show you some more stats on that kind of thing as well. So one of the first things is existing home sales in May were down for the fourth straight month. Now, it seems strange that we are in this accelerating value market kind of thing, and we're fighting over it, but yet sales are down, and we're down for 4 months in a row. So we fell almost 1% last month. And so, right now, we only have a 2.5 month supply, and we're down 20% from last year. Now, last year was when
COVID hit, so the numbers low
we were
skewed.
Coming out of COVID at
but
this
still
point.
The number is low skewed.
Yeah. Also, at the same time, let's talk about what are our home sales trends looking. And so you can kind of see how we've looked for kind of like the past year. And so existing home sales, all SAR means is seasonally adjusted annual rate, but you can kind of see what's going on with existing home sales. And so you can see that really October, January, were really, really heavy months. We were, and to think that we're going to see this downward trend as we go into summer kind of feels like surreal, right? Because normally this
It's
is
a
this is reverse,
reverse.
right?
Yeah, right.
So normally October, November, that kind of stuff, those are our down months. But because of the pandemic, everything just kind of went
Well,
all,
everything got put on hold last
yeah,
summer. So, of course, people are still need to get a home. So, therefore, the activity pushed up during October, our normal slow season, which is normally October,
yeah,
November, December. And now, if you compare, and because of all that interest, and it drive a fierce competition among the sellers and buyers. And I see a little downturn simply because the buyer are tired of being rejected, and so they're putting on
yeah.
hold for a little bit.
Well, but we don't mean to be doom and gloom. We're not. The market is still
Very healthy.
very, very healthy. We're not going anything like that. But if you look at our median price for the year, we're up 23% year over year, and we know that's not sustainable,
It's
right?
not, and honestly, I personally, and based on what I'm seeing
Yeah,
statistically, uh, we're listing at the all-time high right now, and I don't foresee it going up anymore. Matter of fact, if you're at the peak of your listing in your neighborhood, don't expect get a $20,000 above as a
yeah.
list price.
Yeah, and that's kind of what we see is that we feel that we're moving back into a more. It's still going to
Adjustable
be a
rate,
seller's market,
right?
but we're not going to see these 15, 20, $25,000 over asking as we move into late summer and into fall. We're just not seeing that kind of demand at the moment. New home sales were down 6%, month over month, and new home sales are almost 10% up over last year. So our builders are
Hmm.
really trying, but they got a lot of things kind of fighting with them on there kind of thing. You're going to see a lot of news about, why is why is new homes down? Why is new
Right.
homes down in this appreciating market? It really comes down to costs. Costs are really, really driving.
Well, not
Um,
only that, labor too. I
well,
mean,
yeah.
it's hard to
Well,
obtain
but
labor right
labor's yeah,
now.
but labor's part of the cost in there, and so the new construction homes are costing the builders more. So the builders are charging more, and at the same time, that's pricing out an entire market out there.
Hmm.
See how many homes there are under 200 or under $250,000, and there's not. The builders aren't building where our greatest demand is right now,
Right.
kind of thing, and so just a year ago, shares of sales priced below $300,000 was 44% of sales, and now it's down to 26. And so, only 26% of our new construction homes are under 300 grand. And so that's why that's really, and I think that's one of the biggest deals. If our
Well,
builders get
there's
back down, yeah,
yeah, there's no first-time home buyer, so to speak, start a
yeah.
home for new construction at all.
Now the good news is, both for home buyers and builders and DIYers, is that lumber's dropping. Finally.
Yay,
Yes, yes.
20% from their peak.
Yeah, so we're down about 20% on lumber prices, which is, it really does carry through. And so we're very excited to kind of see that move forward kind of thing. And you can kind of see the downward trend. Matter of fact, if you look at softwood lumber price futures because they do these all the way out. And so we're seeing where, uh, August, September,
Hmm.
October future prices are down significantly. And boy, do we need that. At the same time, the mills are now at their highest production rate in 13 years. So I think we are going to start seeing lumber come down, which is going to help the builders to be able to moderate their prices some, is really what we hope, kind of thing. All right. So the Fed met and they moved up their timeline for rate increases. Now, understand that rate increases don't equate to interest rates, but their fiscal policy does, because right now the Fed is not that worried about inflation, although they started talking about it in the
Yep.
past. They just kind of poo-pooed the whole thing and been like, oh, this is temporary kind of thing. But if we keep seeing inflation going the way it's going to go, then the Fed's going to change their buying policy, which means they're not going to buy
The treasury
10-year
bond.
treasuries, which is going to raise the interest rate because our mortgage rates generally follow the 10-year treasury. I mean, almost lay them on top of each other kind of thing. So what does that really mean? Well, guess what happened to interest rates this week? We went up.
We're over 3 now.
Yeah, we're over 3% now, and I'll be really surprised if we drop back below 3. So one thing that we kind of want to talk about a little bit here is, we see inventory opening up just a little bit. We see prices leveling just a little bit. And we see interest rates starting to inch up, but they're still remarkable.
Mhm.
We really feel that by the end of the year, we're going to be in the mid 3s. And so a half a percentage point on interest rate over a 30-year note is a lot of money kind of thing. So getting our folks in and locked in and not letting our buyers like opt out of this market, we really have to help them understand really what's going on.
Comes down to education, honestly, because if you can just work with the lender actually and present numbers and get an actual facts so that they can comprehend a little bit better on paper.
All right. Now, also at the same time, FHA has eased their requirements for home buyers with student loan debt. And this is actually a pretty big deal.
Huge.
I mean, because especially for a lot of our entry level folks, as the market starts to level out more.
A millennial part one had one highest student loan debt in the history of any segment.
Right.
So instead of 1% of the deferred payment is now dropped to half a percent. So it's 0.5% basis that they use for millennial on the student loans. So this dramatically dropped their debt to income ratio quite a bit.
Right, which really means that we have the opportunity to have a lot more FHA buyers. Now, I know in the past the FHA buyers, weren't really feeling a lot of love. Let's just be honest about it, kind of thing.
I will tell you, I am pleasantly surprised because I audit the back end of our company, and I've seen more VA and FHA buyers that are under contract right now. So kudos to the market out there.
Yeah. So that's the thing is we're still going to hear a lot of things going on out there as far as over asking, that kind of stuff. There'll still be those properties that hit the market really hard, but overall we are seeing a lot more FHA buyers. We are seeing more VA buyers, and the fact that we can now add in more FHA buyers as well, that's a really good thing.
Absolutely.
Now, on the negative side is, even though we have low interest rates, what's happening with mortgage payments? And basically my concern here is we're going to make our buyers house poor. And so you can see how over the past year, basically, this is the average mortgage payment in the United States. And so it has risen fairly significantly over where it has been in the past, kind of thing right now. Now, we know that we're in an appreciating market, but we also know that, interest rates are ridiculously low for where they are. But that being said, I think, to me, this is one of those where we have to understand what's going on with the market and also explain this to our buyers. We had some buyers that, some friends of ours that were looking at $150,000 houses, and you can't look at $165,000 and $170,000 house. You have to look at $130,000 house if you're trying to sell that. And so we have to set some clear expectations, because the problem is that when you go look at a higher priced home,
nobody's giving a reduction right now, especially anything less than $200,000.
But also buyer expectations. If you look at a $300,000 house, and then you have to, and then when you start looking at a $250,000 house, is really where you want your payment at. That's a big difference now. And now you've got that expectation kind of thing. And so I don't like the idea of us making our buyers house poor. And so, we kind of need to know what's going on with that as well. At the same time, how do we rank kind of across the U.S.? And so here in the South, you can see that overall our mortgage payments as a percentage of income, we're better than some of the other parts, definitely better than the West.
California.
That kind of stuff. And we're below the national average kind of thing. But, last year, the average mortgage in the South was 13% of their income. Now it's 15. So, we are talking about 1.5, 1.5%, which is not huge, but, those pennies add up.
It
kind
does.
of thing. And so we need to make sure that we're sharing this kind of information with our clients, kind of thing. All right, this past week we did see initial claims for unemployment go down again.
Yay.
Very pleased to see that. Um, the Fed also extended their foreclosure and eviction moratorium one last time. When I say Feds, this is the CDC. And there is all kinds of litigation and lawsuits. Now, first, a couple of things. One is they extended this and said this will be the last time. Now, NAR came out and said there was no need in doing this anyway. There's all these lawsuits out there going on with it right now.
I believe the Supreme Court ruling says that no organization can mandate a mandate such as this. It's not constitutional.
well, but the deal is that by the time it gets through the courts, or by the time it could get through the courts, this last eviction moratorium will have been expired, kind of thing.
Correct.
Everything can get drug out. So basically, the CDC has extended the eviction moratorium again until July 31st. So we have until the end of July. But honestly, even there's some new data out from Zillow and that kind of stuff. The renters are doing much better as well right now, much better than they have been doing in the past, kind of thing, during the pandemic. And with the way unemployment's been going and that kind of stuff, we're seeing a big ease on that for a lot of our renters. But if you do have clients and out there, we want them to know that it is coming to an end.
And just want you to know, right now we're running some issues with sellers that have taken advantage of the deferred payment. Make sure if your seller at any time took any deferred payment with their lender, have them have a very frank conversation with the lender to see what their actual debt is. Because if they cut it too close, I can tell you the seller does not have money bring to closing.
Yeah. All right. Let's see. What were the buyers willing to waive in the past? I mean, in the past couple of months. And so what we're seeing is, and we kind of want to point this out twofold. One is kind of where we're at right now, and two is that we don't think this needs to happen going forward. So the fact that we're waiving appraisal contingencies is the number one thing that our buyers are waiving is a big deal.
Well, what they have essentially done is to put their earnest money on the line.
Yeah.
The only thing the appraisal contingency does is that it will allow the buyer to say either I will make up the difference, or we can renegotiate the difference, or I lose my earnest money. So for them, trying to battle it out with everybody else, for them sometimes it's okay to lose that $1,000 or $2,000 versus not be able to get the home of their dream.
Yep. Next one is that a quarter of our buyers have been waiving their inspection contingency, and we think that's horrible. Personally, I mean,
because there's a lot of DIY during downturn market. A lot of seller were doing things.
Well, and I just think it's one of those things that we have. We have a responsibility to protect the public, and one of the best things we can do is to have a home inspection. So I understand that shorter times, things like that make sense to me, but waiving it entirely, it's one of those things where you're kind of. And now we are seeing, like Ming said, also that some folks are doing that and then willing to put their earnest money as
a risk.
As the risk.
So basically, in Georgia, earnest money is protected with the three contingencies. Now, in other states, earnest money are not. Matter of fact, is a very small down payment that's non-refundable. And then they want to move forward is another earnest money down. Yep. So, those are kind of different strategies we can use and what have you.
All right. The National Association of Realtors came out and said that the housing market is in dire consequence of shortage over the next 30 years. Right now, NAR has us down at about 5.5 million. I've been saying that we've been down 6 million households. NAR put the number at 5.5 million. Close. I'm really close.
500,000 close.
Yeah, which doesn't sound at all right. But, I only missed about 500,000. But still, we're short 6 million, 5.5 million houses right now, or households, for people to live in. When people say, is this a bubble? And when we talked earlier about, we're seeing things soften. We are not seeing this going the other way. We're not seeing this thing, the bottom dropping out. We're not seeing a bubble.
When you say soften, meaning soften of the competition, the way the contracts are written, not necessarily softening of the price. The price, if sellers still hear this, all these chatter in the background says, oh yeah, you can get 20 grand above your list price. That is wrong if you are listing at the top of your market.
Yeah. So we are, and anyway, we just wanted to point out that, listen, no matter what, we're in a housing deficit. We have way more buyers than we have sellers, but we also have way more buyers than we have houses. And right now, about the most homes that our builders can build is about 1.5 million a year. And so no matter what, we're looking at the next 4 or 5 years of really just trying to get caught back up to where we are, because at the same time, the millennial generation it's the largest population segment we have, and they're moving into the first time buyer range. So, that's kind of a big deal right there. So even though I said it was softening, don't think that means it's going down. It's not,
It's
that's not
not.
it at all. And also, we really want to point out that because we're seeing a lot of folks who are saying, okay, I'm going to stay off the market. I'm just going to rent right now. Well, guess what? Suck it up, Buttercup, because it ain't looking real good. U.S. rental prices have reached their highest point in the last 2 years, and you can kind of see what the trend is going here.
Yeah, and
Uh,
honestly, probably 1,600 square foot home, 3 bedroom, 2 bath is now renting $1,700 a month in Henry County. I know as far as mortgage go, it's not that much.
yeah, but you can see that both median rent and rent over last year is really, really shooting up. But the other thing, I mean, if you really look at the data, how about for by unit size? We're seeing that the highest increases are actually in the smaller places, but no one wants the smaller places.
Right.
Right now, um, for 1 bedroom rents are up 8%. Two-bedroom rents are running about 6% up over last year. And so the idea of, what, we're just going to wait this out. We're going to wait for the market to drop. We're going to wait
Actually, two
for.
bedroom is 8% backwards.
Oh,
And one
sorry,
bedroom is 5.8,
my
where
bad.
studio apartments only 1%. So you can see the smaller square footage is of
Yep.
less demand.
Read, Alan, read. I got you. All right. Either way, but what we're saying is that rents, renting is not the salvation for where we are in the market. The idea of, we're gonna ride this storm out. We're gonna wait for this to level off. We're gonna wait for prices to drop. That's not going to happen. And if you're renting right now, you are going to see price increases continuing, because it's normally three months to a year after, because depending on when your lease was
Hmm.
signed, signed, but home values directly correlate to rental rates.
Correct.
So the folks who are like, I'm just going to rent and beat this storm, you're not, because those rates will go up in turn, kind of thing. As soon as, and we'll probably see even greater increases in rent, because as leases come up and as leases come up for renewal, that kind of thing, we're going to see where a lot of that moves up as well.
Absolutely.
Now, what are the top 10 markets for rent increases? Yay, Atlanta's number 7. So right now, you can see that nationwide we weren't up as much, but here in Atlanta, rents are up 13%. Hey Ming, what have property values been doing in Atlanta? About 13 to 15%. So guess what?
Rent
Rent is not,
correlates.
yeah, there's not a salvation to, I'm just going to rent, okay? Because it's going to cost you. As a matter of fact, it's going to cost you a lot more, because now you're not only are you paying the mortgage for the landlord, you're also paying their profit, right?
Hmm.
And so it's always going to be it. And that's one of the things, honestly, that's also contributing to our higher inflation rates right now. We want to speak about Gen Z. Now, Gen Z, these are our young folks, but it gives us a good insight into what Gen Z is going to be looking at going forward. So NAR did some studies on Gen
Survey.
Z,
Yeah.
yep, and kind of thing. And so Gen Z, first of all, Gen Z is these are our college folks, basically, between the ages of 18 and 24. This is our newest,
Next.
yeah, this is our next segment moving into housing. And what do they feel about housing? And so these are important issues, because some of these are actually kind of eye-opening and very different from our millennials. Our Gen Z values home ownership differently than our millennials do. And so we kind of wanted to point that out kind of thing. And so we're going to kind of go through a few of these here with you. And so first of all, of course, the vast majority are single. Only about 12%, they don't have any kids or anything right now yet. They haven't really moved on to that part in their life kind of thing. Most of these are students, but and they're moving up kind of thing. You can see that their income is not there yet. That being said, though, what is their preferred future locations? And this is what's different between millennials and Gen Z, because right now our Gen Z, the vast majority are suburban. Now our millennials really like urban environments and being in, and so if you look at and well, not only that, but urban and suburban are urban is less than millennials. I'm having a hard time today.
It's
Sorry.
okay. So with their current location versus where they're going to move to, as you can see, urban, they have decreased that. And whereas suburban, it's a 2% swing.
Yeah.
But what's really interesting was rural. 5% of them want to move in a rural area. So they're not as highly concentrated.
They want to get outside of the cities,
right?
And that's a big shift.
Yeah, their mindset just a little bit different from the millennial.
Yep. Now, when are they planning on moving, kind of thing? And so you can see that the vast majority, about a quarter of them in 1 to 2 years. Another 30%.
56% is looking at 1 to 5 years.
Yeah. So these are folks that this is going to be our next group moving in housing.
Actually, they're probably in same competition as millennial, if you think about it, if they're planning on moving within 1 to next 5 years, because that's actually the current market for millennials, 1 to 5 years.
See, here's the other difference is that the average first time buyer age in our millennials is 33 years old. We're looking at a much younger. I mean, in previous generations, like if you look at baby boomers, Gen Xers, that kind of thing, the first time buyer age was in that 25 to 28 range kind of thing. And our Gen Zs are moving into that. And it looks like they're going to be doing that. So we could have our Gen Zs moving in at the same time as we have millennials really moving into the housing market as well, kind of thing. What are their number one reason for moving?
Job,
hands down, kind of thing. There's a lot of other stuff, kind of thing. But the number one thing is that they're graduating from college and they want to live in a better place than where they went to school, kind of thing. 72% want to buy a house. This is really, really good news for us in the housing market, because like when the millennials started moving into the housing market, they weren't that interested. They really wanted, and we still see where a larger percentage of millennials rent than in other generations, kind of thing.
And what's interesting, the pandemic really have 64% has made no impact on them as far as whether or not they're afraid of moving or stuff like that. Whereas the baby boomers and the millennial was taking that in huge consideration. So, 72% want to buy versus 28% continue on to rent. That's a huge segment.
And that's really good for the future of housing. Now, when are they looking to buy? Like I said, the vast majority is about 70% is in the next 2 to 5 years, that kind of stuff. But the other thing is, what are they saving for? 45% of our Gen Z is currently saving for a house, and that's
different mentality.
It is, and it's kind of interesting to see that Gen Z is moving in that way. And so I know that most of this data is not going to be super poignant for our business necessarily today, but it really is going to be moving into that way, kind of moving forward here, kind of thing. So I want to talk real quick about what are the top 10 metros by net inflow. And what that means is the number of households moving into a metro area. And guess what? Atlanta ranks number 7. And so for just like the month of May, we gained 7,200 positive households. That takes not only the folks who are moving out and the folks that are moving in. We had 7,000 more people move in total than
most
moved
of it
out.
are from New York.
Well, we are, but a lot of the big area, big cities kind of
Mm-hmm.
thing. Atlanta is still a very popular destination on there kind of thing. The other thing that you can see is that even if you look down the median sale price of the top 10, we actually have the lowest median sale price of all the top 10. So that's a
Makes
really
us
good.
very
And
attractive.
so I know that if you're in here, and we see prices increasing, but compared nationally, kind of interesting. No. All right, so this is a great debate that we have going on in the real estate world, and that is, do you still need a tub? And so, like if you're like us, all right, we put in like an 8-person shower. I don't know. I mean, there's only two of
We
us.
took
Yeah,
a
yeah,
large
yeah,
a jetted tub and made that a shower area.
yeah.
So instead of a jetted area, we made that a large 2, 3 person shower.
And we've been seeing that with the builders and that kind of stuff. But the interesting thing I found was that, so NAR did this study and said, who is, are tubs important? And so they went through and said, what are must-haves and what are desirables? What I found very interesting is that, as far as having both a shower stall in a tub in the primary bath,
Mm-hmm.
that was one of the most important must-haves, an essential must-have. 36% of our buyers say that the master has to have a tub and a shower in it. And so we haven't seen, that's been kind of one of those weird debates going on. Like will not having a tub in my master hurt, that kind of thing. And kind of our feeling before this data was that really, as long as you had a tub to wash the dog or do things like that
Mm-hmm.
with, even if it was in a secondary bathroom, you had to have a tub in the house, but it didn't necessarily have to be in the master. But what we're seeing is that actually that's a pretty big deal out there.
Mm-hmm.
And so, it's just pretty cool when you really start looking at that. After that, it comes down to double vanity is the next most important, having a private toilet area, and then a toilet tub and sink that's all white, because apparently we don't like to match all the times. So, and then, let's see, let's stop sharing here. So, last thing we want to talk about, well, not last thing, I take that back. So, iBuyers are returning to near normal kind of thing. And so, just to understand that the iBuyers are out there, and kind of, not that they
Well,
are out there. We've known that they've been out there, kind of thing.
so they're
The,
returning, and honestly, a lot of them have to do with remarketing, resale back to the real estate agents.
yeah.
And so, what I find was most interesting is a new product out arise from the pandemic. Well, the demand for housing is that companies such as OfferPad, Ribbon, Home Partner America, Divvy, and what have you, they are offering basically become a third party financing
Mhm.
for the buyers to offer the property as cash. And so the end game is to beat these. Basically, the
Yeah.
loan has to be approved, beat the timeline. So if the loan was approved at closing day, it's a much smaller percentage that will pay to these third-party guarantors. If not, then of course the rent is really high, along with a specific time to purchase. So,
Now, Robert, are you here with us as well today? We're hoping that Robert's here with us
well,
today.
he go by RJ. He
Okay.
was the gentleman who did our his shots
Oh,
at our noon and grand opening. So
are you there, Robert?
we don't
I'm
see the
here.
video. I can't.
Having trouble with the video, I think.
Yeah,
Ah,
you probably have to.
all right. Well, I get then we'll just kind of chat with you for now then. Um, so, quick question. So, let me give you a little backup. So, Robert, you like to go by RJ, is that right?
Yes, sir.
All right. So, RJ did the headshots for our we had our grand opening, our new location, and so RJ he's a photographer, and you're with Dominant Productions,
Yes.
and so we appreciate you coming on with us today. We wanted to chat a little bit, and for us, we know what a big deal real estate photography is. And so having a trusted partner that can do real estate photography is crucial. And so that's one of the reasons why we want to have RJ on. The other thing that we really wanted to kind of talk to you about, RJ, was like all the process that you go through, because we go through the multiple
Right.
listing service, and we look down and we're like, oh, that house looks beautiful. And then the next one, you're like, okay, it's kind of sideways. It doesn't have any lighting. You can see it was done with somebody's iPhone and that kind of stuff. Like what's the process you go through to really make amazing real estate photos, kind of thing?
So light is going to be your biggest friend. The more lights, typically, the better. There's a lot of smaller details that go into it. Kind of like you said, framing, that's pretty crucial, the way you compose that shot. I like to tell people they're all kind of like eyebrows. You know, when you look at people's eyebrows in terms of their whole overall body or appearance, you don't think that they're really all that important. They probably seem like a very insignificant detail until they're missing. And then that's all you can stare at.
Or a little wonky.
Yeah, that's true. Well, but to me, that's one of those things, and that's why I wanted you to kind of explain, because I think that sometimes some agents don't give our photographers the credit that's due. The amount of work that goes into preparing each shot and what they go through. I've seen where realtors have just kind of walked through a house and just kind of held their phone on, like tick 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 all the way around, kind of thing, and it shows. When, as opposed to using a professional photographer like RJ, and the process that he goes through. I mean, not only with just taking the pictures, but like you actually doctor them as well, right?
That's correct. So I will show up for an agent, and I'll take the listing photos while we're there, and then I actually send them off to another employee that we've got who manages all the editing of it, so that we can consistently get agents' photos back in a 2-day turnaround for standard, no matter how many I've had to actually take that week. Whereas, otherwise I'd be tied up doing the editing, wouldn't be able to continue to crank these out for agents.
Yeah.
That makes sense.
Now, but you also specialize in drones as well, right?
Yes. So I'm an FAA licensed drone pilot and insured as well. Every set that we do includes aerials as well as the interior and exterior, so that agents don't have to worry about going out there finding somebody else that that might have a drone. It's a risk for them, and I realize that the FAA doesn't probably enforce those rules all that much, or maybe consistently. But man, if you're the one that they decide to make an example of, that's $11,000.
Oh, wow, it's $11,000 violation.
Yes, so it is $10,000 for hiring an unlicensed drone pilot to fly for you. And a $1,000 fine for the pilot themselves. If you, the agent, are the one who went out and bought your own drone thinking you'll save lots of money just doing your own, it's $11,000. They'll give you both fines.
Oh, nice.
Two for deal there.
So that's the first question we need to ask when we hire a photographer that's doing drone picture, whether or not they're FHA licensed. FAA licensed drone photographer.
Yes, that would probably be the best question that you could ask them first.
Okay.
Now, do you feel all homes need a drone photo, or do you feel that it's really just for specific types of properties?
I think it's good for all of them. I've talked to a lot of sellers when I've been there, and they've told me that as buyers, they won't even look at properties that don't have the drone photos included. And the reasoning was because they've learned how people can get quite good or creative with the angles of cameras, and they worry that without the drone photos, people are trying to hide something like a nuclear reactor in the backyard or something. I'm not sure, but they like to be able to see what everything around them looks like.
Yeah. Well, we see more and more buyers that are paying attention to neighborhood as much as they're paying attention to the house. And so being able to see what the overall neighborhood looks like, does it have a bunch of junky cars out on the street as well? And, does it back to high power lines? And I can see the value there for sure.
Correct. That's exactly what they're after. They want to see what they're going to be surrounded by, not just the house they're going to be in.
Very good.
Sounds great. Well, we thank you for coming out to our Noonan
Yeah,
I'm sorry.
yeah. Well, we do appreciate it, but how do folks get in touch with you, RJ?
Yes.
So there's several ways they can get in contact with me. The first and most obvious is they can reach me by phone or text at 678-783-8822, or they can email me at robert@dominantproductions.com.
Or they can
The other
Google you
way
at
is that
Dominant
they could,
Productions.
I'm sorry?
Can they Google you at Dominant Productions and get that
Yes.
link?
You should be able to pull us right up on Google if you type in Dominant Productions. And then
Awesome.
we have a website, which made it pretty easy, dominantproductions.com.
No, well, that's pretty easy to
We've
figure
got a
out.
dedicated real estate landing where they can see previous samples of our real estate photos, some of the commercial advertisements we've made for our services that explain kind of how the process works for payment, delivery, and such, and as well as some video examples for listing videos that we've made as well.
Awesome. Well, RJ, we sure appreciate you coming on with us, and sorry we got you at the end, but we sure appreciate you joining us today. So thank you very much. Anything else that you want to throw out there?
No, sir. Thank you so much for having me today.
Well,
All right. Thanks, and have a great Monday.
You as
All right,
well.
folks. Well, we are going to wrap this up here. So if you need any kind of additional chat with us, so you can go to or max1.rocks/chat. I think Ming's trying to pull that up
Actually,
right now.
you're pinned this, so they can't see this. Just so you
Okay.
know.
So here, I'll take care of that. So Ming wants me to share this with you. So if you'd like to, if you need some me time here, so you can find us at max1.rocks/chat. So afterwards, we always hang out on there and answer any kind of individual questions if anybody has it, that kind of thing. So really, that kind of wraps up our week. We hope that you have a very, very productive week. We appreciate you starting off your Monday morning with us. And if we can be of any kind of service, please call, text, smoke signals. We answer it all.
Thank you. Have a great Monday.
Bye, y'all.
Bye.